All right. Hello, and welcome to the extra bonus round of Toe to Toe podcast, where we take a deeper dive into one agent's business. And today I'm here with Rob Jacobs. Hey, Rob.
Hey, how you doing?
Great. And the reason I wanted to have Rob on is he is a broker and licensed agent in Michigan, and he also owns a company called Short Sale Pathways. And so I wanted to talk to you, Rob, about this climate and if you think we're going to have a lot more short sales now than we did before.
Yeah, we're gonna see some short sales coming in the future. The thing is, this is a completely different animal than we had the last time around. The liquidity issues aren't the problem. You know, last time in '08, there was all the dummy loans and
Right, like people getting deals, like people getting mortgages that they really shouldn't have.
oh yeah. I mean, you were around then. You remember how it was. You get somebody just out of college, 22 years old, just married, coming in. Hey, I'm approved for 300,000.
Right.
Oh, you work at McDonald's? Really? You want to
Right,
buy a
that was
$300,000 house?
terrible. Yeah.
That happened all the time, and
Mm-hmm.
that is not the case this time. Of course, we all know it's the coronavirus situation that's really causing everything to crash. But coming behind that is what's happening to the mortgage markets. They're tightening up their bootstraps, and when we get into some of the issues, that are going to cause this, we have 3.5 million loans in forbearance right now.
What is a normal, like when you look at data on average, how many, like 3.5 million, what, from a perspective standpoint, is that, I mean, that, I assume it's a lot, but like a lot, or?
Um, Percentage wise, let's see. Yeah, we got.
Or what's a normal amount in forbearance? Like, is it normally only 1 million and now it's 3.5?
Oh no, it's probably more like forbearance is a loan modification option typically,
Okay.
and you might have a couple 100,000 tops.
A
So
couple
the loan,
100,000 and now
yeah.
there's 3.5 million?
So right now we have 6.4% of all the loans in America are in forbearance and going up daily, exponentially daily.
Now, let's just briefly define what a forbearance is for the agents that aren't quite sure.
Okay. Yep.
So
Well,
go ahead.
yeah, forbearance is the CARES Act came out, and anybody who has a government subsidized mortgage, Fannie Mae, Freddie Mac, FHA, VA, and the like, are allowed initially 3 months and up to 12 months of forbearance, which is that the person, the homeowner, does not have to pay their mortgage for that amount of time that they're in forbearance with no penalties.
Okay.
Now, the problem that comes into that is that the servicing banks and the banks that are holding the notes all have to pay their investors the money. So basically, you're not paying the bank, or the servicer, but the servicer has to pay the bank. So that is drying up.
That's the problem.
Funds that
Yeah.
are supposed to go back into our economy. Now, that doesn't even touch on the private mortgage loans that are out there that are also the banks are also offering forbearance programs for those too.
Right.
So you're talking about some major liquidity issues coming.
But I think though some people maybe are strategically in forbearance to see what the economy is going to do. But even if that's half of the people, which is unlikely to be half, I imagine, you're saying normally it's a couple 100,000. And even if it's half, you're still looking at 1.5 to 2 million people requesting it.
Yeah,
That's nuts.
It's going up 500,000 every week. And it's as long as people are in lockdown, it's just going to keep.
And they can't work. Right. I mean, so once people go, just, for our audience to kind of create some context, once people enter the forbearance, it pushes what they owe 3 months or 6 months later. So let's just use the example of the mortgage is $2,000 a month. The bank agrees to a 3-month forbearance. At the end of 3 months, the people owe $6,000.
Yep.
Okay. In a lump sum. So then if they can make it, great. Most likely they can't. So then the bank will give them some other options and maybe like a loan modification or something like that. But usually there's something happened, right? And if the people can't stay in their mortgage, if they can't stay in the house, they have to move, and this is where short sales come in.
Right.
And then the bank requires it to be listed with an agent because for those people that don't know or weren't around in like 09, 010, a short sale references that the bank takes a reduction in what's owed on the property. So there's, say you owe $200,000 on the property, the bank might agree to take 150, but in order to do that, they need an offer, and that's where agents come in.
Right.
So, okay, and that's where you come in. So like as an agent yourself and the owner of Short Sale Pathways, you can either, you do coaching for agents that want to learn how to do short sales, which, take it from me, they should never do. Just the other thing you do is you can process the short sale, and then your fee is collected how?
I charge the bank a portion of it, and then I will the remaining of my fee would be paid for by the buyer or seller. Usually the buyer, since the seller is typically insolvent.
Okay, so then that's at, oh, sorry, what?
My fees are based on how many loans are, you know, if there's 2 liens, sometimes 3 liens, you know, it could be a lot more involved in the situation. But, you know, it's starting out at $3,200. And,
Okay.
you know, I get paid that by the bank usually, you know, 75-80% of the time. So not so bad.
Yeah, and then the rest of it will just be on the settlement sheet paid by the buyer.
Right. Yeah.
Like a buyer premium almost, because they're buying the house as is, and they're getting, typically they're getting a good deal.
They're going to get a deal on it. Yeah. And, you know, the key is for the realtors is when you have a listing coming up that you think is going to be a short sale, you want to scrutinize the seller immediately. You know, number one is to make sure that they're 100% on board with going through the process, because, you know, most of the deals fall apart pretty quickly because the seller doesn't want to do the paperwork or is just,
what kind of paperwork can they expect from the seller? What, like if I'm an agent and I've never done a short sale, like what would I say to my client?
Well, the bank's going to require a loss mitigation packet to be completed, which is going to be all of their financials, their a hardship letter. They may ask for bank statements, tax returns, bank accounts, all asset accounts, actually.
Right, everything.
You know, possibly pay stubs. So it gets pretty lengthy. I mean, an average short sale packet that I send in is going to be roughly 100 pages.
Wow.
Yeah, so it gets pretty in depth and intense. And if your seller does not want to go through the process and doesn't want to deal with it, then
or willing to pull the bank statements or something like that, it's never going to work.
Yeah, and you know, when people get 3-4 months behind, the bank's calling them, driving them nuts, and you know, some people just aren't able to deal with it. You know,
they shut down, I imagine.
Yeah. So phase one is to make sure that the seller really wants to go through with it. Once you decide that they are a good client, then we'll decide if they are going to be eligible for the short sale. We'll, you know,
that's when they need to call you.
Yeah. Yeah, we can do that over the phone. I can, if the agent knows, or I can call the seller and talk to them, you know, about what their situation is. You know, it's got to be an open, candid conversation about what they have and where they're going with everything. And then I'll tell them what their options are, what I think will get them approved, if they should be looking at loan modification, or if a deed in lieu is a better option, or if short sale is the way to go for them. And, you know, I'm
I think
the
key takeaway here is if once as the agent we discover that what's owed on the mortgage is more than what the market will bear, I think we just need to call you and see, and go from there. Now, why do you think there's so many more people? I mean, I know that there's Corona and stuff, but it's only been a month and a half, you know, like, so what else is happening?
Well, you know, a lot of people out there didn't get the stimulus money that we were all hoping, you know.
Right.
So, you know, it's going to have an effect on the smaller businesses. You know, any business that recently opened is going to have immediate financial trouble. some of the jobs that, you know, people had. When this whole thing ends, it's not going to be, you know, okay, Monday it's back to work for everybody.
Right. Normal.
Yeah,
Right.
it's going to be a very slow process, and a lot of jobs may just be eliminated. And, you know, people are going to be hard pressed to get back at it. And then you got the fact that, you know, it's going to be probably, you know, within 2 weeks, 5 million people in forbearance. So
Wow.
when they go back to work, they're going to owe, you know, 3 months, 5, 6 months worth
That's
of
so
mortgage payment.
much.
How are they going to
Right.
pay it?
I don't
And
know. It seems
yeah,
nuts to me.
yeah. So, I mean, they're going to be in a situation that is just untenable. And, you know, that's when they're going to need help.
Well, and you were saying too, like it's kind of a double-edged sword. So like it's the banks, I imagine, are doing the forbearance because they believe it's helping the customer, right? Like you don't have to pay, but you have to pay at the end of the 3 months or 6 months or whatever. But at the same time, you're saying, you know, that bank is not getting a forbearance from their investors, so they still have to pay the investors.
Mm-hmm.
So then in return, you're saying they can't then lend out the money, which they normally would.
Yep.
So, I mean,
That's one of the reasons that, you know, credit score now FHA is 680, you know, Chase Bank 700, jumbo loans gone, you know.
right, basically
Yeah,
gone, right.
yeah, pretty much. And this is changing every single day. It's something new. So,
But
I mean,
that's because that those people are less. Oh, right. Yes, I did an interview with a lender for the jumbo loans, and what I didn't know is that jumbo loans are actually more risky than
oh yeah,
regular loans. Okay,
yeah.
so that was interesting to me because I didn't know that. But I mean, we
What's
don't do a
good?
lot of jumbos.
What
Huh?
I found out, I was on a podcast with agent agent mortgage person here in Michigan recently, and he was saying that what the lenders are going to start doing is uh, put the first $510,000 into a GSE, and then have a second and a third loan coming behind it
Wow.
to be able to get these people into the higher end homes.
Right. I
And
mean,
that's
that's really seems like all you could do. I mean,
yeah, it's really
so,
awesome.
okay. So they're thinking that by increasing the credit score, the loan becomes less risky,
Right.
right? Okay. Which then for us creates a problem because, I mean, there's a huge portion of borrowers that are less than like 640 or 680 or 700 or whatever they're
Oh yeah.
requiring.
Yeah, we're going to find that when this is all, when we open up again as realtors, I'm in a state where we can't show houses. We're deemed non-essential, along with, I don't know how many other states, but there's a lot of them.
Right.
When this is over, we're going to go out and be calling our buyers, and it's going to be like, yeah, did you talk to your mortgage lender? No.
Right.
Okay, they call them up, and nope, you're no longer
You're
qualified.
not qualified.
So,
Oh,
one step I would recommend to every agent to do right now is to call their buyers, tell them to call their lenders, make sure that their pre-qualification letter stands, because things have changed considerably just in the past 2 weeks, and they're going to probably change even more in the next 2 weeks.
I mean, I imagine that they are. So I noticed too, or we were talking about earlier, well, I think like 6 months ago, it said that if you had a conventional loan, that you don't have to have an appraisal. But you were saying now too, even FHA is doing like the drive-by appraisals after closing.
Well, they're offering drive-by appraisals pre-closing, and then
Okay.
FHFA is saying they can do an appraisal 120 days after closing.
What does that mean? Why?
I have no idea, honestly.
That
I
makes no
sent it out.
sense.
I've sent it out to a few people, and they just, you know, mind blown. It's
So they're going to
what's the
drive
point?
by prior to, but then 4 months after the new buyers move in, they go and do an appraisal.
Right. What's the point? And
Why?
it's going to cause, yeah. I mean, you're looking at what's this going to do to the values of the houses when they go in and find out that the house shouldn't have been sold at that price, you know?
Right. Or they have repairs that now are back that the seller should have made,
Right.
but now the buyer has to make them.
Yeah, that's just huge
That's
problems coming up the road.
insane.
Yeah, I can't even imagine why that rule would be put into effect, but there it is. Yeah, it's beyond
Maybe
me.
they're thinking that I don't know. I think sometimes those rules for the FHA loans and the VA loans, I think they were put in place to protect the borrower, but some of them are really silly, you know, like, I don't know. I
Yeah.
can't,
Yeah.
they just seem like you're protecting them, but from what, you know?
Well, I understand the drive-by, portion of this, drive-by appraisal because of the COVID-19 situation, and they want to keep housing moving as best as it can. But why even bother offer, 120 days to do an appraisal after closing?
I mean, that makes no sense. And the drive-by is fine for like checking up on things, but really, I mean, if the house is listed, you've got
Yeah,
pictures of the interior and the exterior.
yeah,
Like, what's the point?
yeah.
What about I'm trying to think of what else. Isn't Oh, it was Chase Bank that said that they weren't doing any of the jumbos, but then their scores went up even higher than everybody else. Do you think
Yeah,
they're just going to get
yeah.
out of mortgages in general?
Uh, I don't know. I mean, they went up to 700, and I'm not a mortgage broker, so
Yeah,
that's probably a better question for somebody like that.
right.
But I have been seeing that, the word on the street is that PMI is going to at least double in the future, maybe even triple.
But
With
PMI
the
is really only placed as it's private mortgage insurance
Yeah,
for borrowers that are likely to default, right?
yeah, FHA loans, and the like. So that's basically additional cash for the GSEs to make sure that they have a backstop against
Right,
defaults.
against the default. But
Yeah,
if they're, I mean, that kind of makes sense because they're saying, look, you either need to get your credit up to the 640 or 680 or whatever the requirement is, or you're considered very high risk.
yeah,
And in any industry, when you're considered high risk, you get charged substantially more percentage wise, and it just, life costs more.
yeah.
So I think from a real estate agent standpoint, it's going to be, wait, are they changing down payment requirements too?
That I'm not sure.
I'll ask the lender about that because because the PMI also comes with the lower down payment. So I wonder if they're going to be adjusting that
Yeah.
too. But
I
it
wouldn't
kind of
doubt it.
makes sense that, what's that?
I wouldn't doubt it that they
I
changed
wouldn't
that
doubt it
too.
either because they're saying, okay, well, if you have a low down payment and you're a risk from a credit standpoint, we're going to charge you more. And that's what the PMI is. And that makes sense.
Hmm.
So like you want to, as an agent, I would think we'd want to work with lenders who kind of specialize or have like a rapid rescore or like some kind of credit repair attached because I mean, I don't know the numbers, but how many people, percentage of people are below a 680?
Yeah,
I would
a
think it's a
lot,
lot.
a lot. Yeah, we're going to find that half our buyers are just not even able to purchase a house anymore or more.
Well, and that's going to cause also rent to go up
Hmm.
even more. And rents are already up in a lot of places.
Yeah, and it's going to make it. I mean, there's just not going to be as many buyers. Sellers are going to have a hard time selling their houses, and next thing you know, prices are going to
Especially
start
if they
going
would
down.
have traditionally sold it to like a lower income, low down
Yeah.
payment buyer.
Yep. I mean, we've had what 5 years or more of buyers just you list a house and you get 5 offers. That those days are now over, and it's going to eventually cause prices to go down. Once realtors are released back into the world, we're going to have a huge rush. But
Yeah,
that's just going to be the people that have been chomping at the bit to get a house. So
right.
first month or two, yeah, it's going to be insane. Everything's going to feel like normal, but then reality is going to set in, and that's when we're going to start seeing defaults,
Hmm.
deficiency rates go up, and foreclosures and short sales and things of that nature coming into play again. So I'd
Yeah.
say who knows how long this is going to last, but if it ended like our state is May 15th. If it ends May 15th, I'd bet you any money by September 15th, my short sale queue is doubled
Yeah.
and just going to go up from
I
there.
can see that. It'll be really interesting to see how it plays out because it's never just like one thing is isolated that it only affects that one part,
Yep.
right? Like
Yep.
nothing is isolated.
Yep.
Do you have a class or anything coming up, or should people just, if they're interested in kind of prepping for this, should they just reach out to you directly?
I don't have a class on schedule right now, but I am working on a few things, maybe a video web series,
Okay.
you know, possibly doing some Zoom classes.
Okay.
But, you know, this thing kind of came out of nowhere. And
Yeah, it did. And everybody's gotta. So if they want to know more, should they just email you
oh, yeah,
or call?
email
Okay.
me, call me. Yeah, my website is shortsalepathways.com.
Okay.
Rob at shortsalepathways.com, or you can call me at 888-416-4526.
Okay. And we'll put your contact information in there too for people to reach out.
All right, thank you.
Well, I appreciate you coming on and scaring the shit out of us. Thank you.
Yeah, hopefully, you know, maybe I'm wrong. Maybe everything will be great.
I mean, hopefully that would be awesome, but
Yeah, I mean,
yeah,
I definitely didn't see this coming and didn't want it.
nobody
You know?
did.
It's just,
Yeah. Well, it's
I
better
don't,
to be over prepared and not need it than be under prepared and need it, you
yeah,
know?
exactly.
So thanks a lot,
You're right.
Rob.
All right, thank you.
Bye.
Bye-bye.